Hello traders, welcome back to GolgiFx, and this is your boy Golgi. So in today's video, we'll be looking at 4 tips for supply and demand trading, and also we'll be looking at some examples. So if you are new to our channel, please like this video and subscribe to our channel to be notified in our upcoming videos. And also, if you are a returning subscriber, thank you for supporting our channel and also liking our videos. Traders, let's get into the video. So the first one is stop loss and take profit. So when it comes to profit placing, supply and demand zones can be a great tool for that. So it is important for traders to place their profit target ahead of a zone in order not to give their profit back when trading. And also for stops, you have to set your orders outside the zone to avoid premature stops run or squeeze. So if you look at our chart, so we can set our stops below this demand zone where we can see price consolidating, and this can help us to avoid premature stops run. So let's look at how we can use support and resistance when trading or when using supply and demand zones. So support and resistance zone are natural support and resistance levels. So it's important to pay attention when we see these levels on our chart. So when we combine our traditional support and resistance, it can help us to understand price movement in a much clearer way. So if you are using supply and demand trading style, it is important to also add your support and resistance levels on the chart. Let's look at this chart. So if you look at this, we can see that price was respecting our resistance level for a while before moving down as supply exceed demand. We can use support and resistance trading, or we can add support and resistance trading to our supply and demand strategy, and these levels can also help us to see when and where price will move. So when price started forming clean highs, it was a sign for us to see that supply and demand being equal, and what we'll be waiting next is for us to see a very strong impulse move. And for this case, we saw that there was a strong push to the downside, and this indicates supply exceeding demand. Also, let's look at reversal trading. So in reversal trading, when we look at or identify a strong previous market turn and wait patiently for price to come back to this area for us to see a pattern, is very good. So if there is a false breakout occurring at this demand or supply level, the odds are high for a successful reversal happening at that point. So if you look at our chart, so we can see that as price make an impulse move from this demand point or this demand level, we can see that price came back to that level and start respecting that level. This was a clear sign to tell us that there is more demand for price to go up. So as we see this level, it gives us a clear sign of reversal if a selling market. So if you look at this example, we can see that we are in a selling market. So if you look at this point, then we can see that there is high demand for price to go up. If you also look at moderate volatility, we can see that a supply zone typically shows narrow price behavior. Lots of candle wicks and struck back and forth often gives a sign for future trades. So the narrower a supply or demand zone before a strong breakout, this is the best chance for us to see reacting at the same level in future prices. If you look at our marked level, we can see that as supply exceed demand, there was a push of price to the downside. Then as we receive a retracement, price went to the supply level where mostly we see liquidity around. So what does we take from this? It is always important to mark our supply and demand level, as price can take liquidity from this point. So traders, that's all for this video. I hope you like it. Please like and subscribe to our channel. See you in the next video.